Good morning. Thank you so much for the nice introduction. So welcome, ladies and gentlemen. Let me just jump right into it. Epti, as I sometimes say, stands for Empowering Programmers to Innovate. So we'll be talking a little bit about that, but tells you a bit about the company and us being very programmer-centric and heavy. So let's just jump right into it. So a little bit short introduction about the company. My name is Arlen Mujkic and I'm the CEO and founder of the company. It's been founded in 2017. The headquarters is in Stockholm. The co-headquarters is in Munich, where I am located permanently, and the subsidiaries are also in Malta, Croatia, Bosnia, Poland, Serbia, and Austria latest. We have 250 co-workers consolidated in the group across these 8 countries. And we are listed on First North Nasdaq in Stockholm, and also since February on the quotation board here in Frankfurt, and also since March on Freiberg in Börse Stuttgart. So a little bit about the portfolio, which we will go into a little bit more detail. So we have total 25 companies in the portfolio. 16 of those are majority owned, and they sum up to a net asset value of 70 million approximately. And 9 companies are minority owned, which sum up to 4.3 million. And per Q4 end of year report, we had also investable assets of 5.6 million euros, which sums up on NAV of 80 million since Q4 at the end of the year Q4. A little bit short info about the shareholder structure. Founders hold 45% of the company. The management and board operative people in the company hold 25%, and we have a free float of 30% in the company. The revenue of the group consolidated was 11 million approximately, and an adjusted EBITDA 0.4. As Epti works, as you will see, in 3 main areas, operates in 3 main areas. 2 of those are majority held, core and incubation. We can see a core revenue of 40 million, where I will talk a little bit more about that. It's a very programmer-centric core with an EBITDA of 2.0 billion, and incubation, which is growth companies, technology companies, which we invest in, is growing, and it has a 6 million euro revenue with a minus 1.6 EBITDA. The equity is 22 million, and the total assets are 33, and the market cap is around 50 million currently. Management consists of 5 people, including the 3 founders, as well as our CFO and deputy and CCO, which are also here at the conference today. So feel free to come up and talk to us after the presentation. So a little bit about the business model to just jump right in. So Epti as a listed share of Stockholm Nasdaq. We, as I mentioned, we operate in 3 main areas. Incubation, growth, and core being the central part that creates value in incubation and growth. So from the top, we work with investments, M&A, and BizDev towards these 3 main areas. And the core, as you can see, consists of over 150 co-workers, where 75% are tech-oriented engineers, programmers, growth hackers, online marketing, and 25% are management services. And this is professional services. Currently, the core consists of 4 companies. The latest one acquired only 10 days ago, an SEO company, very high margin company. So the core here is extremely cash flow positive and has the ability to provide services towards the remaining segments. Incubation is our majority owned companies, such as Banner, Apothekamo, Bio, which I will give a few examples of later. And growth segment is the minus 50% controlled companies, so the minority owned ones. So what does core do? Well, it provides tech and management services. To be very easy on that, it's towards the companies in incubation and towards the companies in growth. But not only that, it also provides the same type of services towards third-party customers, meaning that it is a highly cash flow positive and highly cash rich core, which of course creates a very good base to use investments from, right, and building value. Looking at incubation and growth, the focus there is, of course, software and SaaS licensing, so also to third-party customers. So this is where we start to combine being an investment company and being a professional service company as well into one. And this is what you can see here, also called company building. So how do the cash flows work? This is maybe the most important slide. So You see the cash flows we get from services, basically with core providing services to incubation, to growth, and to third-party customers. And then Epti also from dividends of those services up. Then we also have exit cash flows from incubation and growth as those companies grow and we exit them or IPO them. I will talk a little bit about those very, very clear strategy and visions we have for each company from the very beginning and the start. And of course, cash flows from third-party customers in terms of paying for services and paying for software licensing. This creates a beautiful ecosystem where you can find a very nice equilibrium and harmony in creating a cash flow rich environment from combining professional services and equity growth. So how do we create value? If we look at core, we can see, of course, as I mentioned, 75% in tech, 25% in management. That means programming, services such as programming, growth hacking, SEO, UI, UX, DevOps, SecOps, and so on. All of those things today, which is a rarity to find and maybe the most important value of this ecosystem, having amazing coworkers with amazing skill sets to create value through our 100% owned core AB, which also owns 100% of the companies, daughter companies within core. So this is how we create value. So if we look at the value creation process, it's very simply put down in 7 extremely straightforward steps. So we identify a business or a market, and Epti then incorporates or buys a company. Then we use capital and core to invest IT and management resources on top of capital into those companies. Then we build the company as fast as possible using that capital and the resources available from day one, because if you have capital doesn't mean that you have an amazing team there from day one. So we can actually combine that, saving a lot of time for go-to-market and building and creating value. Then we make that company operationally successful using KPIs, data-driven tracking and data-driven operations in business. After that, we create enterprise value for the company through potentially raising money in the company from external strategic investors. And ultimately, then the 7th and final step, exiting the company, creating value for Epti shareholders. So talking about exits, if we look at those and look at our portfolio, it's very important to know that our company is not more than 4.5 years old. So obviously that means that our portfolio of the 25 companies is not more than 4.5 years old under Epti. So the median exit time is 4 to 9 years, depending on the segment. And we have strategically sold around 7% of our portfolio at an average of 2 to 3% per segment to, of course, reap some of the cash benefits along the way, to recapitalize the top Epti to make more investments and acquire more companies. So if we look at the time to exit based from Crunchbase as the data source, we can see that it ranges from 4 to 9 years in the 4 segments where we invest: gaming, fintech, marketplace, and SaaS. Looking then at our portfolio, we've sold around 7% at 6.5 times the money investment for 3.3 average every 1.5 years. So it's still very early and we have the best to come, so to speak, but we do have a very, very clear vision on exit strategy. So when we look at other types of investment companies or supporting roles, you can find companies such as, or setups such as incubators or accelerators or corporate accelerators and so on. So the difference with Epti as a company builder is based on, if you look at this survey, which was done by GSSM on 260 companies, where a company builder was involved, invested, or professionally was a professional founder, they came to the conclusion that they had 30% better results and half the time to an A round. And the simple answer to that is really that capital does not always give you on day one what you need, which is skilled people working in a group dynamic from day one, being very efficient. When you have capital, you need to also hire people to set a team. That team has to, of course, then storm, norm, and then perform. And this takes also time. It's just traditional, normal group dynamics. With core as being that team provider or professional services, you get performing teams from day one on top of that capital as an investor, which makes the company more efficient, reaching results faster, hence better results and faster to A round. So one of the advantages of being a company builder compared to other type of investors is that we We own the projects as we are operational there from the core with, of course, mainly programming services, but also things such as marketing, SEO, sales, etc., which means that we are part of the roadmap and part of the company as a very active investor and owner. We are more efficient and more effective, and that all leads to less failures. If you think about venture capital as an example, the average stake is 10 to 25%. Our stake in incubation example is from 50 to 100%. Venture capital doesn't provide professional services. We provide that to 100%. There is no control strategy. It's very limited, where we have it 100% control of operations. And ultimately, the time to react to failures, which is the most important thing in every company and every landscape, is immediate instead of delayed. Delayed meaning very much too late. So if we look at the landscape of company building, it's nothing that is new, but we are a very engineering-oriented company builder, which is the difference from everybody else. But I would also say the only one that is public and listed correctly. So this is, if you look at the landscape, maybe one of the more famous one in Germany is Rocket Internet, but also Founders Factory in the UK, Untitled in Spain, and so on. But currently, Epti is the only listed one, which gives investors and retail investors and professional investors the ability to actually invest in such a business where you have a very high cash flow positive rich core, and then you have a very interesting portfolio of companies within these four extremely interesting segments. So company building with a clear vision. I think vision is always key, right? So if you look at our criteria for companies, it has to be tech driven, obviously, as our core is programming centric. And it has to be a scalable economy, scalable economics, disruptive product, international ambition, and huge addressable market. When we look at the company that is incubated by Epti, there is always a clear exit strategy from the beginning, such as having monetization in mind from the start. How can this company make money? This is very important. So every incubation company in our portfolio has an idea of how to, or is making money, or is on the way to being profitable. Yeah, such things as wearing IPO glasses from the very beginning. It's also a potential for us to list companies from our portfolio, such as Apoteka, one online pharmacy that we have, for example, for Münchner region, is aiming to do an IPO as an example. So it is also a way for us as a listed company to create more listed companies out of our portfolio. So this is just some examples where we can show you how we have a very clear vision on a clear exit strategy from the beginning, because we need to, of course, build, incubate, and then as we saw, the seventh and final step is exit. So yeah, so if we look a little bit about on the portfolio, as I mentioned before, we focus on gaming, fintech, marketplace, SaaS as the main four segments where we invest, where we have tech at the center. Looking at core, as I mentioned before, people are in the center. It is programmers, it is online marketing, it is growth hackers, it is sales, etc. And you can see a little bit the arrow there. Core actually provides a deep operational support throughout these four segments, where we also, of course, invest capital in terms of investing in the companies, buying the companies, founding them together with other founders as a professional founder. And this is our portfolio, how it is spread out today. So since 2017, we have built a portfolio that totally consists of 25 companies. So looking at those portfolios, we can see that from gaming to SaaS, we have a split where SaaS and gaming are the biggest segments. Of course, SaaS being the leader for the reason it is software as a service, a highly lucrative and highly beneficial segment. And of course, gaming being the second largest one. And fintech and marketplace are there somewhere in equal. Core is around 40 to 50% of our net asset value, which means that we have a very good balance of growth companies with very good potential, but also half of the NAV comes from very cash flow rich business area as core is. So we are always looking to have that very good balance, which gives a low risk profile in terms of a very stable bottom and a very high potential on the upside in terms of equity in the growth companies and incubation companies. So if we look at incubation AB and split that out a bit, remember we're only 4.5 years old in this. So this tells you a little bit about the growth rate we're having. Gaming in banner we have Trustly, the second largest fintech company after Klarna in Sweden as an investor, corner investor. and revenue was booked through Trustly for 2021. But if we look at the other segments, we can see that we have 6 million euros in revenue, and on the incubation side growing. So it's a very fast growing segment for us as well. And if you look at core, we have 14 million euro in revenue on the core services. So totaling 20 million non-consolidated, and that was obviously core work towards some of these companies. The growth segment, we have 9 companies, which in total are, as I mentioned before, about around 4.3 million of our net asset value. To give you a little bit of example of the portfolio, I will start with the growth company as an example. So Space is the world's largest digital culture center in the center of Stockholm. It is started by Björn Ulvaeus, the ABBA member, founder of ABBA, together with Conny Jonsson, the founder of EQT, one of the world's largest private equity funds, and Epti. So we did all of the tech when it comes to the gaming center app and so on. And it's now a very fast growing culture center, 7,500 square meters in the center of Stockholm. The Crown Princess of Sweden and the Crown Prince of Norway were actually visiting us yesterday in Space, for example. So it's a very big project that is doing a lot for the esports, and of course for the younger generation as well as all the ones that like and enjoy playing games on the computer and visiting esports centers. That's an example of a growth case that we have. Going into a little bit on incubation, we have in Banner, as I mentioned, Trustly being the corner investor. This is example partners are Mr. Gamble, Triggy, Lucky Casino. So it's a gaming-oriented express checkout. It increases conversion by 3 times more for the traffic drivers. So when people land on a site where they compare, for example, casinos or bingos or poker bonuses, this helps to convert 3 times more because it shortens the step from click to actually checkout. This is an example of, again, an innovation where you have a very heavy programming IP at the center of it. So revenues are for that company estimated to be 1.3 million euro this year. Apotekamo, it's an online pharmacy. So it's basically Doc Morris and Shop Apoteke for Southeastern Europe. So it's the fastest growing and almost only online pharmacy in that region, especially the only one which is mobile first and uses Western ideas such as free shipping, 24-hour shipping, always show the lowest price. So it's basically also something that exists somewhere that we take into a different region. If you look at some of our other incubation ventures, we're taking it between industries as well. So we're using a lot of this mirroring between industries and between regions to be able to hedge our risks, of course. It has grown by over 500%. So it's a very fast growing case, which is also being fast tracked to be listed as well during hopefully next year. And SaaS is another, Invio is another SaaS example where we have customers such as BMW, Bonnier, H&M. It's a hybrid SaaS software platform for hybrid events. So events such as these, where you have online and offline and hybrid events, it's a platform that helps to coordinate those types of things. So that's just a few examples. And this is the last example of a core company. So Actea Consulting is a company we acquired, as core has a very clear acquisition strategy. It's been founded in 2000, so it's a company that exists for 22 years. And the biggest customer is the Swedish Defense, for example, where it provides management services to the Swedish Defense and also to our incubation and growth companies. So just to give you a little bit of broad segment of how our 3 main business areas work together. Going into the numbers a bit, 88% of our NAV are from our majority holdings, so from incubation, as I mentioned before. And how do we calculate the NAV? Well, it's according to Swedish regulations. We are using some of our parts, meaning that it equals to Epti's ownership of these companies. And we always use the post-money valuation according to the last financial round, where also external investors are invested. So it's not the last round where only we potentially were investors. It has to be with external vetted investors and a substantial round. When there is no capital financial round, then we evaluate it according to invested capital. So book value, very simply. When it comes to core, we use an EBITDA valuation of 12 times EBITDA. Straightforward and very simple. So those are basically the 3 ways we evaluate our NAV. So looking at the NAV and the growth, 2017, when we started, 3 founders, today 250 people in 8 countries, we have grown by 1,750%. That means that our NAV has basically doubled for each year, while the bottom part, as you can see, the darker parts have also grown, and this is the core part. So you can clearly see here, if you think about that the top light part doesn't exist on this graph, you clearly see a consulting group. This is what you see in the growth. If you remove the bottom part, the darker part, and you look at the top, you see an investment company with equity growing. So looking at the whole picture, you actually see what we did. We combined those two worlds into one. This is what makes Epti unique, and even more uniquer of it being listed. So yeah, if we look at a little bit at the financials, while NAV from last year doubled, the decline in results that we see is mainly due to two reasons. So operating expenses grew by a factor of 3 in core, due to core growing very aggressively, and one-time costs in terms of write-offs when we did the listing, which is absolutely normal according to procedure, where we wrote off the goodwill when we went to the market. Before that, we were a private company. And then 2.35 million euros in operating depreciations, while still maintaining 70% NAV increase during the year. If you look at the total assets, it increased by over 50% due to receivables and cash growing by a factor of 6. So yeah, we can go into those numbers a little bit more in detail. If anybody has any questions, just let us know. And this is maybe one of the more important slides. So we increased the equity by 1/3 by still keeping a high equity ratio. So the current liabilities increased mainly due to booking of SaaS annual subscriptions revenues, which is according to Swedish regulations. So basically, when you sell a SaaS subscription for 1 year, you have to put it in period. So it's a liability until each period goes through. And also 2 million from acquisitions, which have already been converted in equity during Q1. So the current liability side is not as high as end of Q4 as it looks like there, as 2 million have already been converted in, and the majority of the remaining comes from booking the SaaS annual subscriptions upfront. So the share price and a little bit of investor relation information. So we have around 500,000, €500,000 in trading volume per month during the period when we took from listing on the Frankfurt exchange or being available on the open market until now. You can see that we have around €500,000 in volume. And of course, there is a 25% decline in the Ukraine situation, which we all are very aware about. That happened, and we live in that reality, unfortunately. But yeah, and looking at the shares outstanding, we have 104 million shares outstanding, and current share price is around 45 to 50 cents. And so the NAV per share per Q4 should be around 80 cents. So that gives a discount of NAV of 43%. Some interesting information that could be good to know is that 24th of May, maybe most importantly, is the Q1 report coming out. And we have also a lot of activities planned in terms of investment roadshows and the MKK conference being here now as well. And then we will be at the IIF Investment Forum on the 19th of May, the 15th of November at MKK again, and IG Kapital Forum on the 28th of November. We are also covered by GBC. I think you can find the research paper outside on the tables, as well as some of our this presentation in physical form as well. Last but not least, I would like to mention a little bit about the team. So the board consists of Tord Lenda. He's the chairman. He was also the chairman of Sweden's most successful stock of all time, large cap company called Vitrolife. He was 11 years on that company's chairman, and it has been the best performing stock during his mandate ever in Swedish history. We have also Sebastian, William, Hans, Susanne, and myself on the board as well, just to mention a few. And team, well, without the team, there is nothing. As I mentioned before, our core is the core of Epti, and the core consists of amazing co-workers, amazing people. So across 8 countries with 150 co-workers in core, the average age is 34 years. The split between male and female is around 70-30%. Which we are very proud about, being a very tech-oriented company, of course. And the employee net promoter score, which is taken every 6 to 9 months, is 64, and everything seen above 50 is excellent, as the score goes from -100 to a +100. It's a little bit about the team. You can see some of our amazing colleagues and co-workers in the background in the pictures. I really like this slide. And yeah, that would be I think there should be a thank you slide in the end here, but I think it fell off.
So I can take over the thank you slide. This was a quite impressive presentation on your young and very dynamic company.
Thank you.
I guess we have a couple of minutes left for questions from the floor or maybe online if you collect online questions. So far not online. Are there any questions in here? There's one.
You are so company Sweden, listed in Sweden, and now we are listed so in Frankfurt to the so why? Because if you look at your portfolio, I don't see any German companies.
Very good. As I mentioned before, we always look at yeah, it's very good question. Thank you. So our portfolio always has very international ambitions, and makes sense to be in the largest and most powerful market in Europe. So if we are not here, we are nowhere. Scandinavia is an amazing place to be. It's very innovative and very digital, but to really succeed fully with the growth and incubation ventures, we need to be here. Otherwise, we are. So this is really the main case to be here. And we think the landscape of both entrepreneurs and the digital transformation happening in Germany, as well as investors, are really ready for a company like this. So of course, we need to be ahead of the curve and be here, both physically, which you can find us in the last slide, we're going to say, across the street of Kapitalmarkt, Frauenstraße 12 here in Munich, where we are permanently located. So that is the reason why we are here.
Okay, so you're treating the case for Germany. That's quite good.
Yes.
I think you're working personally out of Munich.
Yes.
Is there any specific ambition also to invest into German companies right now?
Absolutely. So all of our companies, or majority of them, have an ambition from incubation to also be present in Germany, as it is software as a service company. So we always look at each of these companies which we build in multi-language, multi-local, multi-currency, and that's how we build it, because we are very good at building technology. We always make it flexible in that sense. So for us, it makes sense to use the platform in all of the 8 countries where we are, because we have feet on the ground. That gives us a good compass of how the companies are doing in those countries, both face-to-face with customers, but also online. And of course, helps to be able to grow even more outside of Europe after that.
Nice.
You have a lot of programmers in your team, which is one of your major assets. So are these people all employed, and where are they located?
Good question. So we have about half the core is in Sweden and half is here around Central Europe, to give you approximately. And if we look at Sweden, they're separated between Stockholm and Gothenburg, the 2 major cities. And here in Europe, it's between Munich and Zagreb and Split, Sarajevo, Malta. So as the area here is basically as close as you would be from Gothenburg to Stockholm, it's as far as you are from, or even closer from Munich to Zagreb. So that is how they're split. And yes, they are all employed and they're working within these areas where we have hubs, but we are also a very modern company even before COVID time. So we had distributed offices policy. We call it distributed offices, infinite workspaces. This is how we called it always from the start. And so this gives us a flexibility to be working with people from all around the world, of course. Yeah.
Your acquisition scheme includes gaming and fintech. You're saying there's always tech at the center, but is this really a common ground, or is this more like opportunistic? Whatever is tech loaded would be interesting for you.
No, I myself come from a programming background. I started programming when I was 7 years old, so I've been doing that for a very long time. So quality is of the essence for us. So we're not, of course, there's a big dose of opportunistic side, but not without having quality tech at the core. This is for us very important. So either we build it in quality or we buy something that has quality. And that's because without scalable technology, you cannot reach scalable economics. And ultimately, this is what we need to make the companies really successful in terms of financial terms. Right. So yeah, it's more quality and of course opportunistic side as well in combination.
Okay, very good. So are there any further questions in here? I don't see any right now. Well, there's one more.
Very few questions. The core part also sells its services to third-party customers. What is the ratio roughly between third-party customers and in-house customers?
Very good. The ratio is around 60-40%. which is around how it looks like today, towards being 60% on incubation and growth, and then 40% external. But the growth companies are also in a way external customers, as they're not consolidated in our P&L or book sheet. So that becomes in a way external cash flow as well to Core. So if you look at that terms of ratio, then it would be a little bit the other way around, where 40% would be in incubation and 60% would be between growth and external customers, giving it always a very high rich cash flow. And one more thing I can mention about the Core, and Nico's question about acquisitions. We have a very clear acquisition strategy when it comes to Core. Of course, we have a very strong organic growth. We grew to over 100 people completely organically in growth during the first three and a half years. And then we started acquiring companies. So we acquired 2 Core companies last year. We had a total of 8 acquisitions last year. And during this year, we've had 3 acquisitions, one of which was Core only 10 days ago. That means that we intend to keep growing Core by acquiring Core companies which fit our ecosystem, which are cash flow positive, have external customers, where we can also provide incubation and growth customers to them as well, growing them even further.
Okay, thanks again, Ali.
Thank you.
And
thanks for the very
see you soon in your first capital raise in Germany.
If there will be one. Thanks.